TradeTheMBA.com. This is John. This report is for the 17th of March. Well, we got the bounce that we were talking about. We're still caught between this cyan and red on the DOC with the orange in the middle. As long as it stays that way, you're in continuation mode. But the declining orange, that's tends to be bullish within that. And so there you have your pop plus. We were talking about how we reach that negative 20 plus range that usually creates a pop. What were we? There was literally minus 20 the previous day, and now we're all the way up to minus 1957. Ooh, big improvement. Not so much. So you get a nice little bounce, but short-lived. This was the magenta popping back above. We're still below 25 from an MBI reading here. So as long as it stays below that level, you're also in a relative weakness, but you still have a whole lot of short activity. I mean, from a new standpoint. So you have the volume that already exists, but the narrative is already set. So unless you end up with massive oil takers blowing up everywhere, how much worse are you talking about? It's a question of the duration. And that's where we get into how long will the disruptions take place. And at a certain point, there's an inflection where it becomes unrecoverable. That becomes your catastrophe scenario. We haven't reached that yet. And so, does that make for a lot of excitement? Not from a bullish standpoint, but you also end up with a very easy way to drive short cover rallies and go against the trade. So, still ridiculously high level, 95, 96 here for oil. Uh, yeah, and that pretty much tells the story. So inflation is going to start rippling. Um, Notice it immediately at the gas pump, obviously, and then it's just going to expand from there. So you could talk about strategic reserves, blah 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 blah. This is your risk uh, factor, and it's worth about well, in this case, $30 a barrel. So one third of the cost. That's the insurance premium on the conflict at this particular stage. Longer it stays elevated, though, the worse it gets for the euro. It's surprisingly doing well, even if you can call that drop off of over 5 cents doing well. The reality is everyone's been a downer on the dollar since the tariffs, which turned out to be nothing, and then all of that got refunded. So the fact the euro is even where it is should be near parity at this particular stage, and given their economic activity, even less. But hey, central banks have their reasons, and actually, that's supportive of the euro. Certainly helps S&P companies because they get a lot of derivative bonus from earnings for the exchange. So that's why we see that typically happen. From a gold standpoint, there's no enthusiasm at this particular stage, but as that inflation starts to work through, we're looking at the second half of the year of a nice rally for gold potentially, given a continuation of this, and it's also got the excitement of Bitcoin and that. So we can see where money's got to park. It's got to park outside of the system, and those are your primary choices. Though gold's relatively less attractive simply because of the increase in price, whereas Bitcoin, relatively speaking, related to it, becomes cheaper from that broader standpoint. So what we had is the big bump up, which literally just took us all the way back to the previous day's highs, and then it had just trouble from there. And you can see the fade off pretty clear from the MBI. Magenta standpoint, we stayed underneath, but still slightly above the 25 range. That gave it enough to keep testing, but as MBI white crossed over, you ended up with the beginning of your sell. It just went to the 50%. So that was clean and easy and sort of rebounded off that particular point right there. It was very benign for a Monday, given that you had the whole Carg Island attack thing. Whatever. Prices had shot up by the time market really got going and everything was over. Retraced a bit, and that's all we did pretty much for the day. And you can see how narrow. I mean, I don't even have to move the screen over. That shows you how much less the volumes were. So, market was pretty much at ease with everything that had happened. Had time to digest it over the weekend, and here we are, just pushing the bottom side of that 50%. So, again, this still going to be a hard one because to lift this from here, you just have a lot of dead weight. And so I think it's just going to be a point of everyone's going to be searching for a positive narrative that comes out of it, some sign that there's an end near, and that's going to be the rally point. We're not there yet. So we just keep following the readings as they are. Anything relevant, though, I will put it on the team chat. Have a good one. Trade well.